International Monetary Fund, Bitcoin maturity, as an integral part of the digital asset revolution. Crypto is no longer an obscure asset class within the financial ecosystem, but a growing correlation with the stock market undercuts the investment hedge role of Bitcoin and other cryptocurrencies, according to a new International Monetary Fund research. A blog post accompanying the survey highlights new risks associated with the growing interconnectedness between digital assets and financial markets. Penned by IMF Monetary and Capital Markets Department Director Tobias Adrian and economist Tara Iyer, as well as Research Deputy Division Chief Mahvash Qureshi, the article claims that the increasing correlation between crypto assets and stocks limits their perceived risk diversification benefits and raises the risk of contagion across financial markets. Crypto assets, such as Bitcoin, have matured from an obscure asset class with few users to an integral part of the digital asset revolution, the article reads, adding that this transition comes along with financial stability concerns. Noting that BTC and ETH are rarely correlated with major stock indexes before the pandemic, the authors agreed that crypto assets help diversify risk for investors by acting as a hedge against swings in other asset classes. But this changed after the extraordinary central bank crisis responses of early 2020, the authors wrote, adding that crypto and stocks surged hand in hand as investors' risk appetite grew. The correlation coefficient between BTC and the SP 500 has jumped 3,600%, going from 0.01 to 0.36 after April 2020. This means that the two asset classes have been more closely rising and falling together since the coronavirus pandemic began. Related, what should the crypto industry expect from regulators in 2022? Experts answer, Part 1. With stronger correlation comes greater risks for Bitcoin. According to IMF expert, the growing interconnectedness between crypto and equity markets would permit the transmission of shocks that can destabilize financial markets. Noting that crypto assets are no longer on the fringe of the financial system, the author summarized. The experts further called for a coordinated global regulatory framework to guide national regulation and supervision and mitigate the financial stability risks stemming from the crypto ecosystem. Last month, IMF chief economist Gita Gopinath made a similar call for a global policy regarding crypto. She argued that if countries were to ban crypto, then they would not have any control over offshore exchanges that are not subject to their country's regulations.